welcome everybody. My name is Sarah Snell Cooke. I am your host of the Credit Union Connection. I'm here today with two repeat offenders. We've got Brian Kaas, who's below me, President and Managing Director of TruStage Ventures. Welcome.
Good to see you, Sarah.
Yes, great to see you again. And to my left, Matt Potere, who is the CEO at Happy Money. Welcome.
Thanks, Sarah. Good to be on again.
And why don't you two just take a quick minute to introduce yourselves and your companies. Brian, why don't you start?
Sure. So Brian Kaas, I'm the president and managing director of TruStage Ventures. And TruStage Ventures is the corporate venture capital fund that is operated by TruStage. So I think many of the audience members will be familiar with TruStage, but we're a large insurance and financial services company that's been serving the credit union industry for now just over 90 years. So very proud of the work that we've done to kind of help the industry. We've been now investing in fintech companies for almost a decade now. So have seen a lot of companies, have seen a lot of trends, and definitely excited to kind of talk about where we see things heading over the next 10 years.
Yeah, I want to see that crystal ball. Give me some ideas of where to invest. Go ahead, Matt.
Well, I'm Matt Potere. I'm the CEO of Happy Money. And Happy Money is a consumer finance platform. We partner with credit unions to help fund personal loans to help consumers consolidate debt to save time and money. To date, we've helped over 300,000 members and deployed over $6 billion in loans to help consumers across the country. And
Six,
so
that is a big number. Yes,
yes,
very large.
we've got a long way to go, but we're pretty excited about what we've accomplished so far.
Yeah, that's awesome. So Matt, credit unions are increasingly embracing fintechs, particularly, of course, credit unions trying to reach the younger generations, which they desperately need to. So they have certain expectations of digital tools and the ease of engagement, frictionless. How's that going for you all?
Yeah, so when we talk to our credit union partners, there are a couple of big trends that we're helping address for them, and a couple of big challenges. One is, as you said, the member base at credit unions is getting older, and so they're looking to bring in new members and ensure that they can grow their member base. And so by partnering with companies like Happy Money, that's exactly what we do. We help bring them new members. The other thing, though, we do is we originate high quality loans with good risk adjusted returns. And many of our credit union partners and many credit unions across the country are challenged to originate assets. Consumers don't walk into a branch like they used to 10, 15, 20 years ago. And increasingly, they need access to high quality assets. And again, that's what we do. We do all the marketing. We take all the marketing risk, and we've built our platform to help our partners leverage that and get assets at scale.
Yeah, how many partners do you have right now?
Yeah, so we've got about a dozen partners, which includes some of the largest credit unions in the country.
Awesome. And so, Brian, same question to you. How is it going with credit unions adapting the digital tools and partnering with fintechs to make what needs to happen happen?
Yeah, I certainly am encouraged by what I see from a lot of credit unions, really, I think, kind of embracing all things digital, really kind of leveraging partnerships with fintech companies to assist on that journey. But I also see a lot of credit unions that are falling behind. I think as I kind of look at the industry as a whole, we really need, as many credit unions as possible to kind of really kind of accelerate their digital journeys. Because I think the industry as a whole does better if we all kind of make this leap into the kind of modern financial services world. With that said, I think what we're seeing is just the pace of change and technology is evolving so rapidly that it's not like you can kind of say, well, we put in a new digital banking platform, so we're good for the next decade. I mean, this is crazy what we're seeing in terms of even fintech companies that are 6 or 7 years old being disrupted by new fintech companies and having business models turned on their heads. So, I mean, it's really wild, and AI is really driving a lot of that, and it's only going to accelerate.
And I think for a while there, that was kind of holding people up, trying to understand, get their to get their bearings around AI. And so hopefully, from what I've heard, it seems like we are moving forward, which is great news for all of us. Um, and in doing this, and credit unions partnering with so many different third parties nowadays, they're really shaping the credit union. Obviously, the leaders of the credit union are, selecting those partners. But what do you think as far as like how credit unions are able to trust these third parties to basically serve their members? And credit unions are so, I don't want to say uptight about it, but they rightfully uptight of how
Mhm.
their members are served. Matt, you look like you want to take a stab at that.
Yeah, I mean, the right word you said there is trust. And
Mm,
so when a credit union partners with a company like Happy Money, they're trusting us to help originate high quality assets because they're putting those loans on their balance sheet. And so building that trust and making sure that they're partnering with the right partner that really thinks about risk management, not just doing things compliantly, but with strong credit quality and who have been through some cycles and
mhm,
understand that the economy changes, credit performance can change, and to see around those corners. I always describe us as a consumer finance platform for that reason, because whether we're holding those assets on our own balance sheet or our partners are holding it on theirs, it's really important that we think about credit risk and ensure that they're getting fair returns, and we're doing things in the right ways.
mhm. Brian, anything to add to that?
I mean, I completely agree. Sort of trust is so critical in the success of these partnerships. And one piece of advice I give to credit unions when they're evaluating different potential partners is talk to some of their other credit union customers and learn about their experiences. Do they have the credit union's best interests at heart? Or are they really looking to grow as fast as possible at all expense? Because they're looking to be out to their next company in 2 or 3 years. And so that's really critical. Obviously, with TruStage Ventures, we spend a lot of time really vetting the founders of these companies, trying to find companies that are going to be a good cultural fit with credit unions that, in many cases, are also mission driven. I think Happy Money is a great example of kind of the mission of the company is like, how do we kind of get people on better financial footing by allowing them to consolidate higher interest credit card debt into a consumer loan, to kind of achieve greater financial security. And so that's something we spend a lot of time, when we're getting to meet the companies that could become investments that we then put in front of credit unions.
Hmm. And one of the things, Brian, I'm going to follow up with you on this, and Matt, you're welcome to chime in. But one of the things that previously held credit unions up from partnering was being able to integrate with the core. How have we made progress in that area?
We're starting to make progress. It's been a huge, huge pain point for so many credit unions, and for the fintechs. There are so many legacy technology platforms that credit unions use that it can be very timely, very expensive for companies to be able to integrate and partner with credit unions. Interestingly, over the last few months, I've met with a couple of companies, again, utilizing AI to greatly accelerate the pace of integrations into legacy technologies at a significantly lower cost. And so, I'm cautiously optimistic that sort of the integration challenges of the past decade will be less than what we've kind of suffered through. And that's going to help really, I think, level the playing field for credit unions because that has been a barrier. A big bank, they can throw an army of people, into these integrations, whereas credit unions just don't have that luxury. So again, cautiously optimistic that we're going to see some real progress on that front over the next 18 to 24 months.
Hmm.
Yeah, it's a really, I mean, it's a really important point. And one of the things we spend a lot of time on is we need to give consumers a seamless, fully digital experience. And so for consumers on our platform, they can go beginning to end in a matter of minutes with high quality, diligent underwriting. You know, it's easier to go fast. It's easier to be diligent. We have to do both. And so, and we do both, but we have to do all of that and integrate with our credit union partners and make it easy for them. You know, they don't want to spend months and spend significant dollars uh, doing integrations. And so one of the things we've really focused on is making that integration really turnkey so that they can get access to members who have gone through that great experience to get access to that asset, but they don't have to make the big investment because that's what we do for them. We give them the scale and we make the investment, we make it easy to plug in. It's really important.
Yeah, yeah, and that's also helping credit unions to expand and diversify their membership base. I imagine, especially with a marketplace like yours. Um, I guess I'll stop there and ask that question. How are credit unions expanding?
Yeah, I mean, increasingly they're looking for other assets. You know, I mentioned, indirect auto is an asset that historically it was relatively easy for credit unions to plug into,
Mhm.
um, but they were very concentrated. They've been very concentrated in indirect auto, and so they increasingly want to diversify assets. You know, personal loans are certainly something they're interested in, and even assets that today Happy Money doesn't offer, like HELOCs, have become increasingly more popular as well, for all of those same reasons. Because credit unions, to be healthy and long-term sustainable, they have to have diversification of their asset base.
Mhm.
Yeah, I think technology really is enabling credit unions to reach or at least have access to a much larger potential membership base. We see a lot of credit unions now, really kind of through these fintech partnerships, reaching consumers across the country. Obviously, their field of membership, issues that need to be addressed. But I just see more credit unions embracing those types of relationships, really leveraging the technology again to go after younger members, to have access to some of the platforms that a single credit union isn't going to be able to get any type of placement on Credit Karma, to have access to something like that. So partnering creatively with companies, again, like Happy Money or others, um, to have opportunities to get in front of more members. Union Credit's another company that really works with credit unions to get them placed on some of these marketplaces that are out there. Yeah, I think there's a lot of opportunity. I would like to see more credit unions doing it. A lot of times when I see, it's a list of, 50 to 70 credit unions, I feel that like are very involved on many, many things. And there's, 4,000 credit unions that we need to kind of bring them along to kind of follow suit here.
Mhm.
Because, there are also a lot of fintechs out there that are competing for that member, or banks obviously going aggressively after the credit union member for their next loan or their next deposit account. So we can't ease up on the gas here just
Mhm.
yet.
Now, how much of a obstacle is field of membership, Brian?
Well, I'm not an expert on it, but I feel like a lot of credit unions are able to um, kind of address field of membership requirements through you know and Matt, you might have addressed this
The
issue.
backdoor national nonprofits, yeah.
Yeah,
Mhm.
yes, exactly. Through
Mhm.
some of those types of structures. But I think for a lot of credit unions, it does again kind of create limits on what they're able to do.
Mhm.
But Matt, I'm curious, you probably have this address this question all the time.
Yeah, we do. We definitely see this where, a credit union wants to get access to assets and even diversify geographically, but the field of membership doesn't allow them to do that. One of the things we've done to address that is we have a platform that we call Hive that allows the credit union to take an economic interest in participations. And
Mm.
so it's a way for them to get access to the asset, participate in the loan, without having to deal with the field of membership issues, because we have a sponsoring credit union who takes care of that. And we've
Mm.
increasingly seen, and it's often a way that as credit unions work their way on this journey, sometimes they'll start there, because that's a very easy way for them to start. They get the economic benefits, and then over time look at their field of membership, try to expand their field of membership, and then go direct and bring the member on directly as well through partnerships.
Nice. Yeah. Because then after they do have that loan, they can count that person as a member, correct? I mean, I think.
Yeah, usually if it's direct with the participation, they often don't
Okay.
count that as their member, but they do get access to the asset that they otherwise
Right.
wouldn't have gotten. Yes.
So now, Brian, I know you guys have invested more than $400 million, almost $500 million in
Mhm.
these partnerships with or in the fintechs, and facilitated more than 3,000 partnerships between the fintechs and the credit unions. When you started, was this what you expected? What are you seeing in growth? What would you like to see in growth? Go for it.
Yeah, I guess when we started, and I can remember when we had our first 3 or 4 investments, and I guess I never envisioned that, the fund would grow to the size that it has. And I think, more importantly, the fact that we've been able to help facilitate these relationships is really what, excites me, and what I'm proud of, because you go back to, 2017 and 18, there's a lot of skepticism, and distrust around fintechs. And um, the team and I have spent a lot of time talking at credit union conferences over, the last 6, 7 years, really trying to emphasize the value of these partnerships, the necessity of these partnerships. The technology now, it's becoming so advanced, so complex, very expensive to build, very expensive to maintain, that sort of the days of a credit union trying to build homegrown technology that competes with best-in-class platforms out there is just really challenging.
Hmm.
And so, again, I think the way for credit unions to keep pace with change is going to be through these partnerships. And, I hope when we're talking 5 years from now, we've got 10,000 partnerships that we've helped facilitate. Um, and that's really a big area where we're spending, as much time on creating partnerships in this ecosystem to bring fintechs and credit unions together, as we are on the investing front. It's still going to
Hmm.
be important to what we do, but we invest in a bunch of companies and credit unions aren't partnering with fintechs, then, our mission has not been achieved.
Hmm.
Yeah,
Matt,
as one
any
of those
thoughts?
portfolio companies, I can say it's a real benefit as a portfolio company, as a company that Brian and the team have invested in. It opens up relationships with credit unions we otherwise couldn't have gotten, and I think it goes the other way as well. He has a tool in his toolbox when he's talking to a credit union about being able to diversify assets, and can point them in our direction. And so it's a special ecosystem, and we're
Hmm.
definitely fortunate to be a part of it.
Yeah, for sure. Credit unions are special and people get a taste of it and want more.
Yes.
You get sucked
Absolutely.
in. So, and it's interesting too, because TruStage previously, like you were saying, Brian, before you started TruStage Ventures and when it was CUNA Mutual, it wasn't even, it was a trusted company, but it wasn't particularly considered, I think, an innovative company. So this has been a real change for you all, and the rebrand, I think, totally appropriate to what you're doing today, obviously.
Yeah, kind of when I started it about 2 or 3 years before we launched the venture fund. And, again, I think very different company from when I started versus where we're at today. And, but the world has changed quite a bit. And, fortunately, sort of, our board realized that, credit unions were going to face a lot of headwinds with all the changes in technology and, the digitization of financial services. And we needed to do what we could to kind of help the system, again, kind of navigate that change. And it's like I said, something that will continue to evolve. And so, the work is by no means complete at this point. And we're just excited to do what we can to help these credit unions.
Yeah, we'll probably accelerate even faster going forward.
Yes.
So Matt, I want to close up. You're going to start the close up here. I always allow you guys final thoughts. Why don't you start this time, Matt?
Yeah, I mean, I think we talked a lot about how credit unions are looking to diversify assets, but we really think this is a special time. With AI and other tools and the digitalization of lending, building relationships with companies like Happy Money really help create sustainability for credit unions, and we feel like we're at the intersection of that. And so it's a special time to be a part of it, and it's an incredibly exciting time. And I can think of no better space than partnering with credit unions. So
And
we're
of course,
really fortunate.
you were named Best Consumer Lending Company at Fintech Breakthrough Awards. So congratulations to that.
Yes,
Helps
yes,
with the
we were.
trust.
Thank you. Yeah, we're proud of that for sure.
And Brian, final thoughts.
Yeah, maybe I'll just leave with some tips for credit unions that again are in the early stages of their journey and partnering with credit unions. One, I think it's really important for the senior leadership of those credit unions to have really dedicated discussions of how are we going to navigate through the change, and where do we need to adjust our strategy to find a way to win in the environment. And look at how can these fintech partnerships help on that execution of the strategy. And I think kind of build a culture of innovation within your credit union. And it's a muscle that you have to build. I mean, you have to exercise that muscle. You need to learn how to work with an early stage company, how to test and pilot. And that just doesn't happen naturally. I look at our organization, we spent a lot of time really kind of changing the culture of the organization to really kind of thrive on innovation. And so the sooner a credit union kind of starts on that journey, the better off you're going to be, because again, like success isn't necessarily going to happen overnight. But I guarantee if you start on that journey and you put the work in, you will find success. You'll successfully, navigate this change. Your credit union will be able to grow and thrive with, kind of all the change that lies ahead.
Awesome. Well, thank you, gentlemen, so much for joining us today.
Thanks,
Thank
Brian.
you.